Morning, Market Chameleons. Happy last day of the trading month, November 30th. Hope everyone is doing well. We're waiting for Dimitri. Hey, Dima, how you doing?
Good morning, Will. How are you?
Awesome. Got started right at 9, so let's go right over to the disclaimer and get started with that.
Okay, good morning, everyone. Thanks for joining us. Before we start, keep in mind, Will and I, Market Chameleon, we're not registered investment advisors. We're not broker-dealers. We're not telling you what to do. We're just sharing ideas. If you need professional help, professional advice, call your broker. That's what they're there for, to help answer your questions, provide you with guidance. So there's the disclaimer, everyone.
Excellent. What are you seeing this morning, buddy?
All right, let me just share my screen real quick. And we'll start, I think we'll start with the pre-market report, see what's coming up on the earnings front. I'm going to take a look at some implied volatilities in the sector ETFs, see what's going on there, where some of the sector ETFs are starting to hit like pretty low levels regarding implied volatility relative to where it was historically. And if we have time, we'll get to some bullish, bearish opportunities with the options. And of course, if you have questions, let me know. I'm going to try to answer the questions as we move along. So here's the pre-market report. These are stocks that are actively trading in the pre-market hours. We've got the most active stocks, biggest percentage gainers, biggest percentage decliners. I'm going to take a look first, see what's going on in stocks that have a higher market cap. I'm going to use this filter and look at stocks that have a $20 billion market cap or more. Filter that report, and that up here, the top of the list, that's Moderna. And you said, well, they have some news on it today. They're going to be applying what for like a
relief from the FDA to get fast-tracked their vaccine. So plus there are indications within their vaccine that it actually, if people take it even after they're sick, I mean, this is how I understood it. It can make it a less of a severe case. So
it's actually, so it could be like used as a treatment almost.
That's how they're selling it. I mean, listen, I've seen signs driving on the highway. People are so against vaccines, even with all these vaccines coming. If people don't take them, they don't mean anything, right? So, there's already a big outlash against the, whatever. It's going to be interesting to see how it works out.
Well, if they don't take it, it'll be a big problem, right?
Yeah,
then
it means they're worthless. If the majority of the population doesn't take the vaccine, and listen, we've done light polls with our chameleon community in the morning, and I think I was the only guy who said he would take it. Not that that means anything. Maybe I'm the idiot in the room. I have no idea. But, a lot of people want to wait and see what the outcomes are for the people who are taking it before they stick their toes into the cold water.
And what is part of the issue? They're using new technology to...
It is. It's new technology. It's the first time I think vaccines have been developed this way. Anyone out there, correct us if we're wrong. But it's and listen, people are, not everyone is into the vaccines to begin with. So that's the starting point. Is you've got a percentage of the population that stays away from vaccines. So we'll see.
Right. Yeah. So you got those two things working. That's going to be interesting because if people don't take it, and I feel like some of our rally, something that's built already into the market is that people will take the vaccine, right? Because there's a lot of, like, once that was announced, we saw big jumps in stock prices. So it'll be very interesting to see if people don't take it. That might be a big problem. I
mean, we have just to let people know, Goat just put it in the chat. I refuse to take the RNA vaccine. It alters your DNA and puts synthetic proteins into my body. And he says, look up Prion's disease. I have no idea what that means. But, there are things out there that, make these vaccines look scary, right? So it's going to be a big effort and probably, people will be restricted to doing, if they're going to get people in mass to do it, you're going to have restrictions if people don't take the vaccines. That's, I'm assuming, what's going to come, but that's my 2 cents.
you'll have to keep the restrictions in, right? And
Yeah, you'll either
that's not
have
good for
to. I
business.
mean, people won't be able to go to places if they haven't been vaccinated, right? You're going to have they're going to have to try to force people to take vaccines based on what they can do.
And the issue here, I think, is that people are afraid of the vaccine because what are the side effects? What are their long-term effects? But at the same time, I'm reading nobody knows what the long-term effects are of the coronavirus either. I mean, I know people, they had the coronavirus and they still didn't get their sense of taste or smell back after 3 months. And they're saying that some of the damage done by the coronavirus, even though you start feeling better, it still lingers in there, and you don't know the long-term effects. So it's like, which one do you risk? That's the issue. But let's take a look what else is really quickly, if anything else is popping out. I just see from this filter, 20 billion market cap or higher. We see 24 made the percentage gainers list, 22 on the percentage decliners list. So pretty much even, with market breadth. I don't think it favors bullish or bearish, from that perspective. Let me go to the unfiltered report. I saw a couple ones, like here's just this one caught my attention, Nicola. I think they were expecting to do some deal with General Motors. That doesn't look like, there's going to be an agreement there. So that's down today, 15% in the pre-market hours. CAAS, that's not low market cap stock, looks like a China automotive system. Is that what this is? Let me just take a look real quick. That's up 83%. And this is pretty much, we've been seeing this on a daily basis, things that anything with auto manufacturing, electrical vehicles, auto manufacturing, these have been popping up in the morning, like big percentage gainers here. So this is China Automotive System, closed $3.83, trading $7.01 in the pre-market hours. That's up 83%. If it opens here, that's a new 52-week high. We see this is 52-week range, $1.43 to $4.98. It's trading 2.2 million shares in the pre-market hours, with a float of 11.1 million shares. So on a relative basis, very active in the pre-market hours. This is what it looks like. Seems like maybe there's some news on there dealing with sales, but I'm not going to go into interpreting news. If you guys want to come down, just come down here, read the news. Just looking at the price action analysis. Since we see these almost on a daily basis, I might just move on to save time and cover more, unless there's any questions on the pre-market hour as well.
No, you can move on.
All right. Let's take a look. Here's something interesting. I was looking at a snapshot of the implied volatility. So this is the SPY, S&P 500, and below it, this is the S&P 500 ETF sector ETF. So it breaks down the SPY into its sectors. So we see here consumer discretionary, consumer staples, energy. These are the ETFs. And this here is the implied volatility, the 30-day IV, the change on Friday. And, this is 52-week high, 52-week low range in the implied volatility. Much options volume traded on Friday. And it's IV percentile rank. So what it's doing is comparing the last implied volatility, which was on Friday's close, to in the last 252 days, it's looking at closing implied volatility and giving it a percentile rank. So 25.7 percentile rank means 25% of the previous 252 days, the observations were below the current level, 75% above. So 25% below, 75% above this 16.9% level. And this creates an implied volatility percentile rank for each of these sectors. So we see here right now, this one and they're all already in the subdued, almost all of them in subdued. You see a couple of them still moderate here, haven't fallen below that 30% where it becomes, we consider already subdued. Implied volatility, this one, technology right now on the relative basis sitting at the lowest implied percentile rank, IV percentile rank in this group. So out of this sector ETF technology, which was surprising. I would think something like utilities, might be down there, but technology sector that hit the lowest 22.9 percentile rank. I could take a look really quick. Let's go to that XLK and see what the cost of that straddle is. So we're going to take a look at what does it cost to buy an at the money call, at the money put for 30-day maturity. Okay, so we're looking at a 30-day maturity and then comparing that where it was in the last 52 weeks. So I'm going to go here to XLK, take a look at the options strategy benchmarks, and let's hit the straddle right here. So this is the straddle. So this is looking at buying the at the money call, buying the at the money put, 30 days to maturity. So we see here that will cost you 5% in option premium relative to the stock price. In other words, if at the money was 100, stock is 100. If you bought the call for $2.50, bought the put for $2.50, that's $5. $5 divided by 100 is 5%. So this is premium as a percentage of stock price. So 5% right now, this is what it looked like in the last 52 weeks. We hit the coronavirus. It's now below there. The 52-week average, 6.8%. So we're about 1.8% below that.
That seems so interesting because there was like today, both on CNBC and in the Journal, they're talking about the amount of money flowing into volatility and leveraged and inverse, ETF products, the most flowing in since like 2008. I would have thought that would have been higher than its 52-week there, but it's amazing.
Yeah. They're not certainly the implied volatilities are coming in. We saw that, SPY, all the sector ETFs, two of them are still like in that moderate level where you would like usually see them, but the rest of them are subdued. So right now we're seeing, more subdued levels. And let's just take a look. One way here, let me just take a look really quickly at SPY. I'm going to take a look at their seasonality really quickly. This is SPY seasonality by calendar month. So we've got January, February, March, and we see on average what it returned in the last 10 years, the percentage of the months that it closed higher, percentage lower. And down here, this is the absolute return. So this is taking an average of the absolute return. So converting all these percentage moves to positive and taking the average just to see the magnitude of the moves, either up or down. So we do see here, January 3.9% is a high one, right here. Let me see. Hold on. Let me just move this. October is a high one. It moves around a lot. But December, 2.6% is probably on the lower range, right? When we start looking across all these different months. So it does the volatility tends to come in a little bit in that month of December, looking at the last 10 years of history. And we see we're coming off here November. November usually is a good month for SPY or the S&P 500. 90% of the observations were up, 9% down for an average gain of 2.7%. Here, December, we don't see quite as much, on average break even, close to break even. 7 out of 10 times it closes higher. And we see that the volatility is a little bit more muted in the month of December. Not as much as in June, right? Maybe even April, but close. So not completely unexpected.
I think for the Dow and the SPY, this is going to be the best November since like
Yeah,
1928
this
or
is the point.
29.
Yeah.
It's like
So we see here up 11% this November, right? So huge. That's the best November, right, we've seen in the last 10 years.
what's
Up
it's the
11.
best. I don't very few of us were born since, I mean, it was 28 or 1929. They're saying that was a better month.
Since it's done, yeah. So it's been a huge month. And this, I mean, I'm looking here, we had very volatile year, right, because of that corona, huge down months, then followed by huge up months. So we had some big percentage gains here, 7% in August. We're down September, October, big gain in November. So this year's been especially a different type of year, right, with the corona and the vaccines and all the stuff going on. Let me jump to, let's go to earnings really quickly. Unless you have any questions, Will.
Nope, you can go.
Okay, let's go to earnings really quickly. Then take a look at like bullish, bearish option opportunities if we have time. So here we're going to take a look at stocks that are expected to report earnings in the next 2 weeks. I'm going to use this filter looking for stocks that on average trade 5,000 contracts or more per day. Let's take a look at what's coming up in the next 2 weeks. And then we're going to compare what the options are implying versus the historical moves. So here, this is Zoom. They're expected to report today after the market close. As of Friday's close, the straddle was implying a move of 15.1% in your direction. So remember, buying the call, buying the put at the money, implying a move of 15.1%. That compares to a 4-quarter average move, actual move of 16.3% in the last 4 quarters, and a 12-quarter average move of 15.3%. So about 1%, 1.2% below that 4-quarter average, almost in line with the 12-quarter average, a little bit below 0.2%. The high move in Zoom was 40.8% after reporting earnings. Momo, that's coming out tomorrow before the market opens. That's expecting them, as of Friday's close, the options were implying a move of 11.6% in either direction. That compares to a 4-quarter average move of 10.6% and a 12-quarter average move of 9.8%. So we're 3.1% above the 4-quarter average, 1.7% above the 12-quarter average. The high move in the last 12 quarters, 18.8% in Momo. Let me jump up. Let's do a few more. HPE, that's tomorrow after the market close. The expected implied move is 7%. The compares to a 4-quarter average move of 6.6% and a 12-quarter average move of 5.5%. So a little bit above that 4-quarter average, 0.4%, 1.5% above the 12-quarter average. The high move in the last 12 quarters is 11.5%. CRM, that's Salesforce, I believe. Right, that's expected to report tomorrow after the market close. The implied move 7.9% as of Friday's close. That compares to a 4-quarter average move of 8.5% and a 12-quarter average move of 5.1%. So we're 0.6% below that 4-quarter average, 2.9% above the 12-quarter average. The high move on that is 26% in the last 12 quarters. Let me see. These are going to December 2nd, so I'll leave those for tomorrow. But those are really quickly, that's what's coming up, and that's comparing to what the options are implying versus the historical moves.
Any option ideas detected going into this CRM? I know that's a product that
I was going to do option idea. Is that a question somebody's at? Because I wanted to go over bullish and bearish ideas. Will,
yeah, perfect.
Did you have a specific question though? Did somebody have?
Well, Goat was asking about CRM. He's saying, should I buy if there's a dip, should I buy it? I just wondered if there were any option strategies going into this earnings. But yeah, just go to bullish bearish. That's fine.
Okay, I'll do that then. So this is CRM. This is historically what the options were implying heading into earnings. versus what the actual moves were. So these long bars here, up and down, that's what the straddle was implying in either direction. Remember, buying a call, buying a put. So you start out 0, that's the percentage move up and down. So here we see a really big move to the upside. So on August 25th, after the market closed, CRM reported earnings. They're up 26% on the news. The straddle was implying a move of 4.9%. In other words, if you bought that straddle, it broke right through, so it was profitable from the buy side. If you sold it, you'd have to buy back higher. So that's what this is showing, that it went right through what the straddle is implying. In a red, that's just showing the move to the downside compared to the move implied in either direction. So May 28th, after the market closed, CRM reported earnings. It was down 3.5%. That compares, the implied move was up or down 4%. So the move was more muted than what the options were implying. So here's the stats here. CRM, they overestimated the move 83% of the time. So you can see most of the time it overestimated the move. On average, the implied move was 5.1% in either direction. That compares to actual historical average of 5.1%. So almost in line. So really, this one really big outlier, right, is what kind of really did it. Where if you're playing those averages, that one big out up 26% took away. If you're playing the averages from the short side, if you're playing the averages from the long side, obviously this was a big win. But from the short side, that was all taken away right here with this big, huge move. Let me just see really quickly what it's detecting here. I'm going to look at the defined risk strategies. So here it's looking at a call butterfly. So historically, doing it 2 days before earnings, taking it off. They have the earnings in the last 11 observations. That was a winner 82% of the time for an average return of 54%. So here, to mimic that, looking at November 30th, you would be opening, closing December 2nd, December 4th expiration. So I'm hovering over here. This would be, buying the 267.5 call, selling 2 of the 247.5 calls, buying the 227.5 call for 775. Sorry, 755. We think it's worth 775. So that would be theoretical edge of 20 cents. Iron butterfly, doing it 2 days before, taking it off day of earnings and the last 11 observations. That was a winner 82% of the time for an average return of 52%. So we're looking at December 4th expiration. That would be buying the 227.5 put, selling the 247.5 put, buying the 247.5 call, selling the 267.5 call for that would be a credit of $13.16, right? Because you're selling at the monies, and we think it's worth $12.25. So a theoretical edge of 91 cents. And you can see here, let's do one more. Here's a credit put spread. So this would be selling at the money put, buying a 25 delta put 2 days before, taking out day of earnings. In the last 12 observations, it was a winner 75% of the time for an average gain of 21%. So that would be December 4th. You would be selling the 247.5 put, buying the 232.5 put for a credit of $5.70. We think it's worth theoretically it's worth $4. So that's a theoretical edge of $1.70. Okay. All right, we'll do one more here. This is an out of the money put spread. So instead of an at the money put spread, this out of the money, selling the 25 delta put, buying the 15 delta put 2 days before earnings, doing the day of earnings. Out of the last 10 times, it was a winner all 10 times for an average gain of 18%. So this would be looking at December 4th expiration. You'll be selling the 232.5 put, buying the 222.5 put for $1.87. We think it's worth theoretically 41 cents. So that's $1.46 theoretical edge. So that's really quickly in the CRM. Here we've got a couple
Great.
time. And let me see. So I'm not going to be able to get to the bull bear, Will. So really quickly, maybe just look at the unusual option volume. I've been trying to get to those trade cards, but we haven't been able to. But like really quickly, let's just do what was on the unusual options volume on Friday. So we see here, these are the stocks that had unusual option volume sorted by biggest percentage gainers on the day. So we see ORMP that traded 2,324 contracts on Friday, but that's 40 times its average daily option volume, $120,000 worth of calls versus $7,000 worth of puts traded. Stock was up 37%. Looks like a healthcare stock. Rail that traded 125 times its average daily option volume, $409 worth of calls trading versus $26,000 worth of puts. That was up 37% on Friday. SOL traded 9.4 times its average daily option volume, traded 12,920 contracts, $1.3 million worth of calls, $600,000 worth of puts. That stock was up 33% on Friday, and I believe they had an earnings coming up December 1st. SNDL traded 8.8 times its average daily option volume, $709,000 worth of calls versus $92,000 worth of puts. That's like a penny stock, up 32%. IGC, let's see, that traded 7 times its average daily option volume, $627,000 worth of calls trading, almost $10,000 worth of puts. That was up 30%, and that's a lower price stock. But let's just take a look what they're doing today. I'm going to just pop this open. All right, so ORMP, that looks like in a pre-market right now, it's trading up 27%. Let me see, Rail, that looks like it's down 8.3%. See SOL in a pre-market up 10.3%. SNDL, that's up 30%. That's a penny stock. IGC, that's up 25% in a pre-market. NK down 2.8%. Let me just see one more. ARCT up 4% in a pre-market. So this is just really quickly. Remember, Friday we had a shortened day where we closed at 1 o'clock. But just wanted to go really quickly, see what's going on in the pre-market. Let me, we have like 2 minutes. I'll just go for the last 2 minutes. Well,
cool.
Yeah. So this is on the homepage. Let's take a look at any bullish opportunities that was filtered out. So here on the bullish side, let's do the first 3: Apple, Facebook, Tesla. So an Apple filtered out long call, buying the 125 call December 18th, 76 cents. We think theoretically it's worth 205. That's 169% theoretical edge with a historical probability of success 30%. Here's a bull put spread, selling the 117 put December 11th, buying the 114 put December 11th for credit $1.27. We think it's worth 94 cents. That's a 19% edge with a theoretical probability of success 70%. Let's do Tesla. Let's see what it showed in Tesla. So Tesla looked at buying the 650 call December 18th for $27.35. We think theoretically it's worth $49.13. That's a 79% theoretical edge with a historical probability of success 31%. Bull put spread, selling the $555 strike put on December 4th, buying the 550 put in December 4th, $1.65 credit. We think
hard
it's
even
worth,
to say.
Yeah. Very hard once you get above like the 100 strikes. We think theoretically it's worth 82 cents. That's a theoretical edge of 24.9% with a historical probability of success 84%. I think I hit 9:30.
Yep.
So
Awesome job, Dima. Everyone, thanks for joining us. Chameleon's great as always. Big chat. Dima, great job today. Thanks so much. We'll get more of those bullish and bearish ideas tomorrow. Dima, any last words?
No, thanks everybody for joining us tonight. We're going to have a webinar. I'm going to do it on this guy over here, price action analysis. So we'll go over some examples how to use this tool over here. We'll do like some seasonality earnings and just go over some examples.
And I'll put that link really quickly in the chat. It's also at the beginning of the chat. I put the link. All right, Dima, great job. We'll talk to you later, buddy.
Thanks, everyone. Hope to see you guys later or see